Hello everyone, welcome back to the channel. Today I'll be breaking down the top RWA tokens to watch in 2026. Comment 2026 if you're early to the RWAs. Based on research, real adoption, and institutional interest, 2025 was a massive year for real-world assets, but 2026, it's looking even bigger. Today, I'll show you the top RWA tokens to watch in 2026 based on real adoption, institutional interest, on-chain data, real utility.
No hype, Fridu, just research. Let's get into it. Comment 2026 if you're early to the RWA wave.
Token number one, ONDO, the king of tokenized treasuries. Why it matters? Biggest player in tokenized T-bills. Hundreds of millions flowing in.
Major institutions watching it. Infrastructure is already running, not theory. Real yields, real backing, strong regulatory positioning.
Chainlink, the RWA infrastructure backbone. Why it matters? Expert breakdown. Chainlink isn't just giving pricing, they're building the entire data and connectivity layer for RWAs. Here's what makes it massive.
Tokenized assets need real-world data.
RWAs depend on accurate info like asset prices, interest rates, collateral values, settlement data, exchange rates.
Smart contracts can't do this alone. They need an oracle. Chainlink is the #1 provider globally.
Still on what makes Chainlink massive.
CCIP, the cross-chain interoperability protocol. This is the big one. CCIP allows tokenized assets to move across chains. Banks link their internal systems to blockchains, secure off-chain settlement with on-chain execution. This makes Chainlink the internet cable for RWAs.
CCIP is already being tested by global banks, traditional finance companies, blockchain foundations.
Partnership strength. Publicly known collaborations include Swift experiments and major financial institutions testing tokenization.
Multiple L1 and L2 chains using Chainlink feeds. Not hype, actual adoption and pilots.
No RWA can scale without security. If RWAs get hacked due to bad data,
Billions could be lost. Chainlink is trusted because it has a decentralized Oracle network and a strong security track record. This is why institutions choose it.
why 2026 is big for Chainlink? A, RWA boom, Oracle boom. More price feeds are needed, off-chain data needs verification, and
More chains need cross-chain transfers. Chainlink is positioned to supply all three.
CCIP adoption curve. Many blockchains are upgrading their RWA environments in 2026.
CCIP becomes the infrastructure layer, similar to how TCP/IP powers websites, CCIP may power RWAs.
That means usage at low price increased link demand.
Enterprise-grade tokenization. Banks prefer Chainlink because it fits compliance, it supports private and public chain interactions, and it has battle-tested security. 2026 will see more launches from asset managers, credit firms, tokenization labs, financial market infra. All of this requires Oracle Rails.
Token 3, Polymesh, the compliant blockchain for RWAs. Why it matters. Expert breakdown. Polymesh is not a general-purpose blockchain.
Polymesh was designed specifically for regulated assets, meaning things like security tokens, real estate shares, government-regulated RWAs. Bond tokens, compliant equity tokens. This is important because not all are viewed existing
on public, permissionless chains like Solana or Ethereum due to regulation. Polymesh fills that gap.
Built for compliance from day one. Unlike normal blockchains where compliance is added later through third-party tools,
Polymesh has on-chain identity verification, permission validator set, compliance engine built directly into the chain,
restricted transfers for regulated assets. This solves one of the biggest problems in RWA adoption.
Regulators want control and visibility. Crypto wants openness. Polymesh sits in the middle.
2. Institutional-ready architecture. Polymesh is designed so institutions can tokenize assets legally. Brokers can track ownership, transfers can be blocked if needed, Identity is verified, regulators can audit flows.
This is what banks and asset managers require. Most popular blockchains can't do this.
Polymesh plays in the heaviest RWA category. While some RWA protocols
Focus on T-bills, yield, real estate, invoices. Polymesh focuses on regulated securities, which is a much larger market. Think corporate bonds, private equity, large real estate funds, tokenized stock markets, government securities. These markets are worth trillions. Even a tiny share is big. Why 2026 is big for Polymesh? A. Regulatory clarity is coming. Countries are slowly approving tokenized securities, creating digital asset frameworks, allowing blockchain-based financial products. Chains that are built for compliance, like Polymesh, will benefit the most. B. Institutions prefer permission chains. 2026 will see banks launching tokenization pilots. Blockchain rails. Financial regulators approving tokenized asset classes. These players need verified identities, trackable transfers, permissioned execution. Polymesh gives them a ready-made environment. Security tokens are returning. The security token wave from 2018 failed because blockchains weren't ready. Now they are. 2026 might be the real boom. And Polymesh is positioned perfectly. D. Demand for POLYX grows as activity grows. Every tokenized asset requires on-chain actions, compliance checks, settlements, smart contract activity. All of these require POLYX for gas plus governing.
Four, Maple MPL, the on-chain credit market. Maple is one of the first protocols to bring institutional-level lending onto the blockchain. Instead of tokenizing assets, Maple tokenizes the credit markets themselves. This means companies
borrow on-chain, liquidity providers earn yields, underwriters manage risk. Everything is transparent. It's basically
DeFi for professional lenders. Maple solves traditional credit problems. Traditional credit is slow and opaque. Through on-chain transparency, programmable lending rules, automated interest and repayments, blockchain-based credit monitoring. Institutions love it because it removes middlemen. Maple is used by real borrowers.
Borrowers include crypto market makers, institutional trading firms, emerging on-chain businesses.
These are real companies borrowing real funds, not simulations. Maple introduced structured credit pools.
These pools allow different risk levels, collateralized loans, liquidity diversification, and
This puts Maple years ahead of other lending protocols. YD26 is big for Maple.
Liquidity returning to crypto.
As markets recover, firms borrow more, yield demand rises, risk appetite increases. On-chain credit will explode. 2026 will see tokenized credit funds, on-chain loan portfolios, enterprise borrowers. Maple becomes the infrastructure for this. Yield becomes attractive again. Regulators tightening stablecoin rules.
Transparent on-chain yield sources like Maple. Demand for MPL increases.
As more loans are issued, more pools are created, more borrowers join, more governance decisions happen.
Token 5, Centrifuge DO, the real-world asset pipeline. Why it matters? Centrifuge focuses
On bringing real-world assets onto the blockchain at scale. This includes real estate, invoices, private credit, SME loans, and consumer loans.
They are one of the few protocols with actual businesses funding through RWAs. Centrifuge connects the real world to DeFi.
Centrifuge allows asset originators to tokenize real assets, pool them, create pools, create yield-bearing credit investors.
get funding from DeFi investors. No hype real assets, real borrowers.
Chainlink, their RWA engine. Chainlink allows issuers to drop assets,
Investors to fund them. Automated repayments. Verified collateral. This is how real-world credit enters DeFi.
Centrifuge has strong RWA partnerships. They've worked with MakerDAO for RWA collateral, large fintech lenders, and institutions.
Institutional investors. This gives them a major advantage. Why 2026 is big for Centrifuge.
RWA inflows expected to surge. More investors want yield backed by real assets.
Real estate and private credit tokenization. Two of the fastest growing RWA sectors. Real estate, private credit. Centrifuge already operates in both.
Stable yield demand. Centrifuge provides risk-adjusted stable yields, which institutions prefer. CFG value grows through pool creation, asset onboarding, governance votes, protocol fees. Token 6, Mantra Ala, the regulated RWA hub for Asia. Why it matters.
Mantra is building one of the first regulation-focused RWA ecosystems designed to support
Tokenized real estate, tokenized securities, regulated on-chain finance, institutional RWA rail, compliance-friendly DeFi. But what makes Mantra special is its geographical advantage. Mantra positions itself in Asia. Asia is becoming the global leader in digital assets, blockchain regulation, tokenization experiments, government-led pilots.
Mantra is building infrastructure specifically aligned with these markets. This is a huge advantage because adoption is happening fastest in Asia. Mantra is creating a full RWA stack, not just a token.
They're regulated L1, smart contract rails, KYC-enabled DeFi products. This means they benefit from every part of the chain. Strong backing and partnerships.
Mantra has licensing advantages and a regulatory head start. Asia is leading the RWA wave, and Mantra is positioned right in this area.
Government associations, institutional partnerships, RWA developers building on them. Many RWA chains don't have this regulatory head start. Why 2026 is big for Mantra?
Asia will lead the RWA wave. Countries like Singapore, Hong Kong, UAE are pushing real-world tokenization faster than the West. Mantra is positioned right in this area.
Regulated execution. Mantra is designed for exactly this environment. As RWA adoption grows, demand for OM grows because
OM powers the chain, OM is used for gas, OM is needed for governance, OM secures the network.
These are the top RWA tokens to watch in 2026 based on adoption, partnerships, and real-world utility. Which one do you think will lead next year?
Drop your thoughts in the comments. I reply to everyone. Like this video if you want part 2 with emerging RWA projects.